is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Alice Loy, general partner of Relevance Ventures. Relevance Ventures is an early-stage venture capital firm based in Nashville, Tennessee, focusing on startups that drive social, environmental, and individual wellness. With over $125 million in assets under management, firm invests $250K to $2.5 million in companies across sectors like fintech, edtech, healthcare, and CPG. Alice, thank you for joining us.
Delighted to be here.
Great. So where are you calling from today?
I am in the Relevance office that is in Santa Fe, New Mexico today.
Great. Well, tell us more about your background. What did you do before this?
Sure. Well, let's see. So I grew up in California and did a reverse move. Everybody else seems to be moving to California, but I moved to New Mexico about 25 years ago. I went to the University of New Mexico where I earned a master's and then a PhD in entrepreneurship and fell in love with entrepreneurs and the challenges of starting businesses, big or small, and how business can be a positive force in the world, which now, of course, we talk about as impact. I've spent the last 15 years building an organization called Creative Startups, which started the world's first accelerator for creative entrepreneurs. We've worked all over the world and was fortunate in that work to meet a lot of Native American entrepreneurs, work with some foundations and federal agencies investing in Native American communities to help build sovereign economies. And through that work, came to meet the founders of Relevance Ventures, Dean and Cameron Newton.
So how did you get to that place where you were starting the first startup accelerator for creatives? What inspired you to take that path?
Oh, good question. Boy, this is a while ago. So in 2010, 2011, the guys up in Boulder had started Techstars, and my husband knew them, was a mentor early on with Techstars. And I had been working with creatives, and I thought to myself, gosh, how come all the tech entrepreneurs get all the resources? How come they get, special education programs and weekends where they get to start businesses and yet the creatives, whether the artists, designers, architects, don't really get the support or even the recognition as economic drivers, as contributors to a unique sense of place, and increasingly designing the things that we all consume, whether it's Netflix or locally owned restaurants and brew pubs. Creatives tend to be the people founding those companies. So based on that experience, our organization was approached by the National Science Foundation, and they said, if we gave you a grant, what would you do? And those dollars are always nice because NSF tends to invest in deeply innovative things. And so we spent a couple months and came back to them and said, we want to start the world's first accelerator for creatives, thinking that they would sort of say, that's weird, no. And instead they said, sure, sounds great. Good luck. They gave us a pile of money and we went and did that.
Then what led you to focus on native-led ventures and then wellness companies and immersive businesses? What drove you in that direction?
Yeah, so it seems some people have sort of said, oh, it seems like you're taking a right turn, but I honestly think it's just a slight veering into an area of the economy that recognizes issues related to sustainability, investing more in regional economies, building businesses that contribute to human sustainability instead of businesses that make a mess that we then have to clean up. A lot of impact work it's an area I've been working in for 20 plus years. And it started out that impact and socially responsible investing was kind of focused on, we'll do some things to clean up the messes that we made. And my fundamental belief has always been that if you invest in businesses and entrepreneurs that don't intend to make a mess, that the market economics around that become more efficient, the investors make more money, The entrepreneurs are people who are often more grounded in empathy and a sense of place and commitment to everyone's well-being. So in terms of native entrepreneurs living in New Mexico, we are blessed with a lot of native excellence. We're home to 23 tribes, both Pueblos, the Apache Nation, the Navajo Nation. And I've always just been fortunate to, in my work, meet a lot of native people and really enjoy doing work with them. And over the years, those networks have grown, and my interest in their different perspectives around economics and sustainability keeps me coming back for more opportunities to learn and change how we do business in this country.
So, in the creative economy, what are the unique challenges and opportunities you found there?
Oh, it's changed enormously. I mean, the next frontier, of course, has AI changing everything and has a lot of creative people pretty concerned about how either their creative works will be utilized, plagiarized, etc. But from the time when I first started working in this area around 2006, 2007, I was teaching a course at the business school, a master's level course. And I would say at that time, people really singularly defined the creative economy as focused on arts and culture. And now, what is it? It's almost 20 years later. People are starting to see the creative economy as a space where human ingenuity leads. And it might be expressed as a new technology or a piece of visual art or music, but it's that creative human process less than it is all about art. And you see that reflected in increasingly so for example, the state of New Mexico recently established the Division of Creative Industries under the Department of Economic Development. Los Angeles is considering doing something similar. More and more states and counties are saying that, the creative industries are driving not only what creates a more interesting sense of place, but is creating jobs that younger people especially really pursue, want to be a part of.
Great. So, you're now with Relevance Ventures. What inspired them to go after social, environmental, and individual wellness as a central investment theme? What was the decision behind that?
Yeah, oh, that's an interesting question. So the first thing to maybe know about Relevance Ventures is it's based in Nashville, which is of course home to a spectacular set of healthcare companies, biotech companies, publicly traded healthcare companies, and a very robust startup ecosystem. And of course, the universities there, Vanderbilt has helped contribute to that ecosystem, but there are increasingly investors in that ecosystem. And Nashville is now kind of the hot spot in the United States for healthcare. And so, as a firm, we've been aware of market developments and opportunities. And our first fund centered on wellness and healthcare. It was a $51 million fund. And basically, we utilized it as a way to suss out the much bigger opportunity around wellness, because what we suspected was that nationally and even globally now, the trend away from what we consider to be the sick care system toward investing in for ourselves as individuals and LPs and others, it's trending to invest in wellness. So people are turning away from sort of popping a pill and fixing a problem after you've already had it because you have a chronic illness or something else, and turning toward preventative care, opportunities to make decisions for yourself about your own health care, your own wellness, and a sense of proactive and very informed wellness. So sometimes people joke, they say, oh, so do you invest in, day spas or Lululemon or, and we're quick to say, no, look, we invest in companies that diminish the reliance on the sick care system and increase access to preventive care solutions, keeping people well, keeping people out of that sick care system. Part of the perspective stems really from Dean and Cameron's native roots. So they're both Native American, they're Potomac tribal members and have a different perspective on how economies and companies can work for society and bring a more holistic, a more integrative sense And so we're not an impact firm, but we do generate a lot of positive impact through the investments that we make.
Well, so how does being based in Nashville impact Relevance's ability to identify and invest in startups across the country? How does Nashville do that?
Oh, great question. Yeah. Well, Nashville, like I said a bit earlier, is definitely a hub. One of the reasons I joined is that it helps bring access to the West Coast. Historically, we've had a very strong network and deal flow and syndication opportunities from the Southeast. But as we go to market now, we are looking to expand our reach out west. And so being in Santa Fe, having a presence in Denver, California, et cetera, has helped with that. The other way, though, that we are very different from perhaps other venture firms is we launched a network called the Global Health and Wellness Investor Network. And this national network, it's a tech platform where VC vetted deals can be accessed by members. And that community of experts and investors and entrepreneurs does two things. One, it makes it easier for entrepreneurs of all backgrounds to be able to access investor networks. And as we know, that is one of the things that has constrained innovation is these sort of closed door networks, right? And we want to make it more accessible. And because so many of the entrepreneurs in the wellness space are women, people of color, we know a lot of opportunity is happening there. And so the Global Health and Wellness Investor Network, we call it GWIN, the acronym is GWIN, enables a connection between entrepreneurs and investors around vetted deals. It also gives us, yeah, you asked, how does it change our access nationally? It gives us a network of people who not only are helping us understand the trends, but they can refer vendors, they can help solve problems around needing to recruit executives, they can help fundraise, they can advise entrepreneurs on product development. So it's really becoming a national network of wellness experts.
So, looking at the investment thesis, what qualities do you look for in startups when considering investment, especially in areas like fintech, edtech, and healthcare?
Yeah, great question. So when you know a little bit more about the firm, you know that Dean he calls himself a recovering lawyer. He went to Harvard Law and then, as he says, practiced law for a minute and then spent a couple years recovering. His brother Cameron was on Wall Street doing distressed debt and other sorts of very Wall Streety things. And so some of the investments from Fund One were in fintech and things that we knew we could make money in that were good deals. The vast majority, over 80% of the deals in Fund One are wellness companies and healthcare companies. Our thesis moving forward with our next fund is we're tripling down on wellness. In other words, as I mentioned, we used Fund One to figure out what is the market opportunity around wellness. Honestly, it's bigger and moving faster than we even expected or hoped. And so our next fund will be larger. It will be mostly focused on wellness, but we've done very well, I guess you could say, leaving a door open for opportunities in areas that we feel we have expertise, like fintech or similar. And so our thesis is we can make money for our investors by reducing care or reducing reliance on the sick care system and increasing access to preventive care and care for chronic conditions.
Well, so how has Relevance Ventures evolved since 2011? It's grown to over 125 million in assets under management. That's quite the journey.
Yeah, and originally the firm way back when Cameron joined an existing firm and over time he and his brother decided it was kind of their dream. It's very cute actually in the office in the Nashville office there's a letter on the wall framed and hung on the wall that Cameron wrote to his brother when Cameron was 12 years old and in the handwritten letter it says, "I really hope someday we own a business together." And then it says, "And then I would buy a Lamborghini." Yeah, so he was on track to be a VC with his brother starting at age 12. But I would say that Relevance is a different kind of firm in a couple of ways. One, partly because the brothers co-founded it. They have a sense of commitment to each other and to community that not a lot of firms have. And so as they bought out the partners who had owned what was called Relevance Capital earlier in 2011 and before that. They took a turn with Relevance, and the evolution has been since that earlier firm to be focused entirely on wellness, but also to focus on entrepreneurs who we consider to be what you would call authentic, or sometimes we say obsessive about solving the problem that they're solving. We think that those are the entrepreneurs who tend to outperform the market and stick with it when things get really messy and challenging, like they did during COVID. A great example actually would be Talkiatry. So with Fund One, we invested in Talkiatry, a New York firm, as seed investors. And then again, when they raised a Series A, they recently raised a Series C that Andreessen led. And Talkiatry is a great example because the founders of that had had personal experiences with mental health challenges in their families, in their own lives. And so they deeply understood the need and the opportunity. And what Talkiatry does is it's a tech platform where insurance providers and mental health providers can connect with clients, with patients, and provide services across state lines. But more importantly, as you and I remember, it used to be that you had to pay out of pocket, right? You went to a therapist or you went to a counselor, you had to pay out of pocket. Well, these days, most insurance companies offer coverage, but then you have to find your provider. And so Talkiatry has solved that market gap and made it possible for over 1 million patients now to find that mental health provider. The outcomes are as good or better as when people, so they use telemedicine, they use Zoom or a similar technology, and the outcomes are as good or better than when you go into the office and visit with a mental health provider. And when you think that over half of Americans live in a community without a psychiatrist, and yet depression rates are through the roof, this is a solution that is desperately needed. So why did we make a bet on Talkiatry? Because they were obsessed about solving this problem. They were going to solve this problem come hell or high water. And so when you ask, what do we look for in entrepreneurs? Market gap, huge problem, preventive care, and a founder who is driven to solve that problem.
So let's talk about the potential reward of the fund. What can you say about exits so far and returns to the investors?
Let's see. So the multiple on invested capital right now, I think is 1.5. And we will be making some returns to our investors. This Fund One, is a 2018 vintage. And we are starting to make distributions by the end of the year out of that fund, which we know our LPs are very grateful for. I don't know how much more I can really say about that. Let's see, we had an exit of Diet ID. There were two other exits that were not publicly sort of discussed or made available. I don't know what the right term would be. And a couple of our companies are raising substantial rounds right now. I would say that we were lucky. I don't know if it's better to be lucky or smart, right? But we were lucky to invest in a couple of companies that actually COVID helped. You sort of hate to say that COVID was a good thing because it certainly was not. But some companies were positioned to thrive in that environment. Talkiatry is one, pet screening is another company that has done very well. And so we have a couple of companies that, maybe unlike other venture firms where COVID really decimated their portfolio, for us, it accelerated some of the growth. And so we're fortunate in that regard.
That's great. So I always ask this question: what are the differences between you and your competitors? How are you different?
Well, that's a great question, huh? Well, one of the things that's very different about us, and, we win the Founder Friendly Award every year for, here's what I would say. Relevance is different because we love working with entrepreneurs. So we don't make investments and then say, let me know when you've made me a pile of money. That is absolutely not how we do business. We get completely involved, not in a way where we're trying to take over. We don't have entrepreneurs saying, oh, they took the business away from me. Not at all. Our portfolio entrepreneurs describe us as another team member. We are on the bench waiting to be called onto the field. We will go to the mat. We spend hours and hours. The other thing that we bring is because our team is diverse professionally. So we have an ex Wall Street guy in Cameron. We have a Harvard Law venture guy in Dean. I do impact and community engagement, and I've worked with hundreds of seed and pre seed companies. We have native team members who can open up market channels for diverse owned companies. We put everything on the mat for the companies we work with, and we have a really different array of skills. We're not just five guys who all went to Harvard or Wharton, and not that there's anything wrong with that, but at some point every startup's got some weird problem. And oftentimes we raise our hands and go, "Oh, we actually can solve that. Yeah, we can do that with you. Sure." So that's one of the ways. I would say too, being based in Nashville, there are not yet a lot of top tier firms in Nashville. And when Cameron started Relevance, one of his goals was to become one of the top tier firms, to build a top tier firm in Nashville. Tennessee is his home state, and he wanted to do that with his own community. So we stand out in that regard. And of course, I'd be remiss not to say that being a Native American led firm, we're the first and largest Native American owned firm in the United States, privately owned. The tribes do have some venture funds that they manage, but we're a typical private VC firm. We know of two others. And so that's an area we are working on, honestly. Some people ask us, how are you helping Native communities, which is a very legitimate question. And in the end, when we did an analysis of what's going on with Native American communities, which struggle with health, chronic health issues at greater levels than other communities do, which continue to face very challenging economic conditions, we decided through analysis that we could raise a fund that was devoted to Native American entrepreneurs, but we would have greater impact if we started a national nonprofit organizing people in finance to lift up an entire next generation of Native entrepreneurs. So we launched the Native American Capital and Investment Alliance. So the Native American Capital and Investment Alliance, NACIA, has already received 3 federal grants and is providing entrepreneurship education around raising financing, types of capital, uses of capital, sources of capital for Native American entrepreneurs. We provide mentorship, workshops, events, and we're intending to, as we say, turn the Titanic on this issue of Native communities really being not just under-resourced and undercapitalized, but excluded from the nation's economy for many years.
So what advice would you give someone entering the native space, the Native American space that you're talking about? What would you tell them to do before they join in?
Well, first of all, let me say that I am not Native American. I am a very well-bred mutt from Northern Europe. So I would never try to say this is, what a Native person should do. And honestly, I think the challenge that I have witnessed in people I've worked with, Native people, is they talk a lot about finding a balance between your values as a Native person and a business owner. And probably the most interesting piece that I've heard is from a woman named Kelly Holmes, who's involved with Relevance and is also founder of Native Max New Media. And Kelly says, you have to fight for your business, be a warrior for your business, stand up for your business, go to the mat for your business. That's how you can help your people. And so I don't have any advice for Native people, but I think Kelly's advice is probably warranted.
That's great. And so what online information source do you find most helpful in your work?
Well, I'm addicted to the Wall Street Journal. I'm addicted to the New York Times. I read Venture Capital Daily or Journal. I read a lot of impact newsletters. I do like, oh gosh, I can't remember now. I'm so bad with names. Anyway, I would say that I do read some of the Substack newsletters that come out around impact investing. But honestly, I try not to follow too closely the venture world because I don't want to become a lemming. I don't want to be someone who only sees the world through the lens of venture capital. I think that starts to make it more difficult to see opportunities and see entrepreneurs who are different and their potential. So I don't want to become just another chip off the block. So I try to stay informed, but I also try and read a lot of random things and that may or may not have anything to do. I do read the Global Wellness Institute's newsletter. They always have very good work and they have a great annual conference. I read the Berkeley Wellness newsletter, and Commonwealth also has fantastic healthcare policy and wellness research and writings.
Well, a few more questions then. And one is, what is one thing your fund did that you didn't expect it to do? What surprised you at Relevance Ventures?
It did not invest in any Native entrepreneurs, and we were heartbroken. 56% of Fund One, and this was just organic,
Oh, wow.
56% was invested in women and people of color. It just happened. We don't have the same biases maybe that other folks have. But when we looked back, we had 0 Native entrepreneurs, and that was very eye-opening for us. We sort of assumed that, being a Native-led firm, we would have Native American entrepreneurs coming to us. That's what opened our eyes around needing to start the Native American Capital and Investment Alliance. We thought, okay, this is a bigger problem than our firm alone or one fund could solve. Something has to change here, and we need a lot of allies, a lot of foundations and banks and tribes and others who want to solve this with us. But that was
Right.
that was a surprise that was not great.
That is interesting. Well, in the last minutes that we have for today, what else should we cover that we haven't?
I think one of the interesting questions that your audience might think about is how we get next gen family office and young people who are of families of high wealth, ultra high net worth individual families, yada yada. How we get those people involved. I have 2 kids and they're 19 and 22. And I think their value system is radically different. What they are concerned about and wanting to work on is very different from my generation, our generation. And when I cast that out across lots of Gen Zers, I'm very concerned about how we get that generation involved in what I call impact, but I don't know what they would call it. What will that next generation of people who either inherit wealth or create their own wealth be interested in, and how do we move them into that flow now?
That's a great question. There's a great resource there that could be leveraged into this space, and looking forward to working with you on that.
That would be great. Yeah, there's some interesting minds starting to say, how can we get young people involved so that because they do want to build businesses and they do want to get involved in investment, but they seem to interpret that there's a chasm between doing good in the world and making money. And I think that's a false chasm. I think you can definitely do both.
Great. Well, so how best for listeners to get back in touch with you?
Oh, I'm easy to find on email, aloy@relevanceventures.com.
Very good.
Or
We'll put
our
that in the show
website.
notes.
Yeah.
And was there anything else you wanted to put on that?
No, I'm just very grateful to be here, and
No.
I thank you for all your thoughtful questions and letting me share everything I can about relevance and the importance of investing in wellness.
Well, we appreciate you joining today. We'll include your contact details in the show notes, and we hope to have you back for a follow-up soon.
Alrighty. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.